Nilesh Shah of Kotak Mutual Fund is with us. Nilesh, what is going on? Who is selling? What's happening to this market? You know, the thing is that this is third day running, right? Typically, you know, it's not so one way. There are little bounces here and there. And I don't know how much of this is linked to the nervousness ahead of the stress test, or the results that you all will publish on Friday.
So one thing I can reassure everyone, the stress tests are not going to give any cause for this correction. If we see last 1 year, it was 1-2 ka 3 market. The large caps delivered about 33% return. Mid and small cap delivered about 61 and 69% return. And small cap micro caps delivered about 93% return. Some of those excesses are going out. And abhi ye 3-2 ka ek market bana hai. The small caps are down about 12%, mid caps about 6%, large caps about 4%. So this is the unwinding of the excesses rather than, you know, the stress test of mutual fund. It is stress test of leveraged retail investors who went into kachra stocks. And we have been saying that for some time, that some of the stocks are way ahead of their fundamentals. It is their stress test. And unfortunately for them, they are failing in their stress test.
So just to follow up, Nilesh, on that, no, very true. I mean, I'm not saying that this is caused by the stress test at all, but I think that the tests were being conducted exactly for a day like this, that the reason could be something else, some trigger that leads to the fall. Then what happens? Then can mutual funds ensure orderly, you know, payouts, etc.? What I'm given to understand, at least one of the biggest fund houses that I was speaking to, is that they're not facing redemption pressure in their mid and small cap funds. What have you been hearing, and you know, what are you experiencing at Kotak?
So Surabhi, we have seen March 2020 COVID era. That was trial by fire, not stress test alone. We survived that. This time we are backed by mutual fund distributors who are hand-holding customers. If in COVID period they could give us 60,000 crore of flows in a market where fundamentals are still in place and only excesses are unwinding, I don't see a reason why real investors will not take this an opportunity to increase their allocation to equity. And on the way down, our small cap funds as an industry, not just Kotak small cap fund, but most of the industry will be outperforming benchmark indices. We haven't invested in kachra stock, and hence on the way down, we are actually outperforming. So this will give more confidence to investors that they should be coming into small and mid cap stocks through mutual funds rather than going direct into the market following the telegram channels.
Nilesh, just one quick question. Why are you confident that the stress test results are not going to give the markets any stress? What do you think is going to come out of it, in your own opinion?
So we have been doing this number exercise for a long period of time. It's just that now this will be shared with public so that they can take an informed decision. There is no better disinfectant than sunlight, and SEBI has always pushed industry to the highest level of transparency. What we are going to publish over the weekend is not something which we are not aware of, that we have been using and conducting forever.
Hi Nilesh, good afternoon and good to see you in. Nilesh, you know, everyone's been talking about that the domestic mutual fund industry is sitting on a lot of liquidity and they're waiting to deploy money. Now we're getting some bit of an opportunity. I wanted, you know, if you have an estimate of what could be the rough liquidity that the industry is sitting on?
So Nigel, number one, we are sitting on a lot of liquidity. But that doesn't mean that I'm going to give exit to kachra stock investors or traders.
True.
If I see there is a desperation in selling by retail investor, by HNI investor, by FPI, or by anyone else, I'm not going to give them exit at a fair price. I'll keep on testing their patience and I'll figure out who will blink first. In March 20, we had money, but we didn't give FPI cheap exit. We kept on lowering the prices to get their portfolio out, and then market bounced back. So markets are ruthless. No one is going to give me a fair value exit if I'm desperate, and no one should expect me to do the same thing. But from a liquidity point of view, let's say there is about 100,000 crore worth of cash sitting in equity mutual funds. We keep that cash for day-to-day redemptions. But if markets are becoming cheaper and cheaper, that cash balance can come down significantly from current level. The second is asset allocation fund stroke balance advantage fund. We can increase allocation to equity in those funds as markets become cheaper. That number on a thumb rule basis is roughly between 75,000 crore to 85,000 crore. Of course, none of them will be deployed overnight. It's a calibrated, gradual deployment, but there is firepower of 75 to 80,000 crore for quality stocks. Then there is SIP flows. So we'll have roughly about 400,000 crore of buying power over next 12 months.
Okay, that's a fair amount of power that you already have, and I'm sure if there's one thing that retail has learned, that days like these typically provide great entry opportunities. So I'm sure that you'll be getting more of that firepower in as well. Nilesh, just a word on the extent of the correction. I know these things are hard to predict, but to what extent has the kachara gotten cleaned out? We are down some 10% on the small cap index. We are down some 14-15% on the BSE SME IPO index, down some 5-6% on the mid cap. The question is, will you keep waiting for better prices like you did in COVID? Or do you think at some point gradually, in the near future at least, when do funds like yourselves turn buyers?
So we will be buyers today. I don't know what my team is doing right now, but I'm sure they will be evaluating opportunities. But as Kotak Mutual Fund and most of the mutual fund industry, we don't invest in SME stocks. Their liquidity is very, very low and governance standards are unpredictable. I believe there will be far more correction happening over there. This is just tip of the iceberg. Even in some of the micro cap stocks, I believe there will be more correction due. The prices had run up fairly ahead of fundamentals. One counter where we have been saying that please exercise caution was low floating stock counters. The floating stock was limited, float was controlled, and limited activity was resulting into higher price impact. Normally, market is pendulum. It either swings above fair value or swings below fair value. So I will say there will be still some correction in SME stocks, in micro caps, but the broad indices are unlikely to witness that kind of correction. It will be, as I mentioned, 3-2 ka 1 market. Micro caps will fall 3 times more than larger caps.
Got that. What about the PSU stocks, whether they're in power, railway, defense? We've already seen about a near 10% correction from peak levels for these PSU stocks. But this is after the stocks have practically doubled, tripled in some cases. Is today a good buying opportunity, or do you think one should wait for lower levels to buy a basket of PSU stocks?
So, Reema, you'll never be able to time the market. I have no ability to sell at the top and buy at the bottom. You'll have to make a guess as to if the seller is desperate to sell, you'll keep on buying at lower and lower prices. If you believe seller is a seller at a limited price, then you'll have to probably look at fair value and buy. My limited point here is that no one will be able to tell you where is the bottom of the stock or a market. We can probably guess fair value. And in the PSU counters where there is low floating stock, I still think there is room for further correction. The valuations were very, very high because of controlled floating stock. And there could be slightly more correction. We will take a call on an individual bottom-up basis. If market is desperate to sell, we will try to buy it at a lower price. If market is selling with a reasonable price limit, then we'll try to buy it at fair value.
Okay, all right. Well, Nilesh, if you could give us a guesstimate on the headline index. There's actually a lot of selling in the broader markets, but on the headline, we're down a paltry 2%. 22,000 is still there. A few days ago, it was 22,400. What are we crying about? So, in case this is we're going to see more amount of selling on the headline index, if you were to give us a guesstimate, what could the crack be? We've seen only 2%. How much deeper could it go?
Nigel, first of all, I must thank you that you believe I am intelligent enough to predict the market. Thank you so much. No one else thinks so high of me. And on Nigel, I had written 1-2 ka 3 market should not become 3-2 ka 1 market. That was based on a chart prepared by an analyst, which showed how micro caps had moved 3 times more than the large caps. So I think the correction is rewinding of excesses, and it will be fair to say that the broad market, the large cap indices will not correct as much as the micro cap indices.
Okay, Nilesh, you've really explained things so well, and in your, your quintessential style, really helpful perspective. Before we let you go, slightly off topic, but it's still something very, very relevant. A lot of people are watching all the block trades that are happening in this market, and there's enough liquidity because big block trades are going through very, very easily. Today was a big one, right? The ITC trade in which BAT sold out. So one question that usually comes up is that while a lot of promoters are selling, and these are cases where either promoters, Indian promoters are selling, foreign promoters are selling, or private equity promoters are selling, one question that comes up is that, who's smarter, the exiting promoter or the mutual fund buyer? Because in many of these blocks, the buyers are, of course, your fraternity, domestic funds, it is us, retail investors. So is that a spot of bother at all? How do you look at the valuations, the kind of, sort of deal-making activity that's been going on, because there are big numbers there?
So, Surabhi, undoubtedly promoters are smarter. That's why they are businessmen and entrepreneur and not an employee like a mutual fund manager. There's no doubt in my mind that promoter is a far, far smarter person than an ordinary fund manager like me. But the time horizons could be different. The leverage could be different. A promoter might be selling to lower his leverage, to raise capital for investing into newer businesses where he may expect much higher return because he is capable of taking higher risk. His risk-return appetite is substantially higher than mine. So we could create a win-win situation where promoter sells and he invests into some much higher risk, higher return opportunity, and a fund manager invest into lower risk, lower return opportunity. But on any given day, promoters are far, far smarter than fund manager.
No, the reason I asked is that, should these promoter exits, should they be seen as sort of a verdict on valuations? I think that's where the concern was coming in from, that are promoters, being the smart guys, exiting at what is perhaps peak valuation? That's, I think, the big question that everybody is trying to get some perspective on.
Undoubtedly, Surabhi, a promoter selling is a flag which one should carefully watch. If he's selling for reducing leverage, no problem. If he's selling to raise capital to invest into another venture, no problem. But if he's selling because of valuation, because he believes his company is excessively valued, then you do your homework 20 times more to check whether you are in right direction or not. On the other hand, if multinational promoters are selling, don't take it as gospel's truth saying that Gora hai to sahi hai. They could go wrong. For example, Coca-Cola left India in the 70s. They came back. So many multinational companies who are selling their Indian subsidiaries today, they'll come back to invest or buy at a much higher price. It is possible. So promoters selling for valuation, definitely a cause of concern. You have to do your homework 20 times to check whether you are right or promoter is right.
All right, Nilesh, as they say, right, before the promoter sells, they have the vision and you have the money, and after that, U-turns. You're stuck with the vision and they have the money. But that's the way things have panned out, Nilesh. And also, I have the highest regard for your word, Nilesh. So we appreciate you joining in. And as I always tell you, I go according to a lot of the advice that you put in there. So I don't stop my sips at all. Thanks a lot for joining in and giving us that quick insight into the markets.